Hi, everyone. Welcome to Unconfirmed, the show that reveals how the marquee names in crypto are reacting to the week's top headlines and gets the inside scoop on what they see on the horizon. I'm your host, Laura Shin, a journalist with over 2 decades of experience. I started covering crypto 6 years ago, and as a senior editor at Forbes, was the first mainstream media reporter to cover cryptocurrency full-time. This is the June 18th episode of Unconfirmed. The Crypto.com app pays you up to 8.5% interest on your Bitcoin. Get $25 when you download the Crypto.com app with code LAURA. The link is in the description. Near is an open source platform that accelerates the development of decentralized applications, overcoming high fees and slow speeds with its fast, scalable, low-cost, and climate-neutral blockchain protocol. Learn more at near.org. Tezos is smart money that's redefining what it means to hold and exchange value in a digitally connected world. Discover how people are reimagining the world around you on Tezos. Today's guest is Jaynti Kanani, co-founder and CEO of Polygon. Welcome, Jaynti.
Thank you, Laura, for having me.
Polygon has had quite a few months, especially considering that the overall market has kind of been in a bit of the doldrums. So can you tell me from your perspective the story of how Polygon has taken off these last few months?
Definitely. So we have been working on Polygon since 2017 and launched our mainnet in last year, May. And since then, we are working with dApps to onboard them on Polygon. And we had 100, 200 app applications at the time before 3 months ago. And then the NFT boom came, right? And DeFi was there, DeFi boom was there, and everyone was trying to send transactions on Ethereum, right? And at the time, like Ethereum gas fees went like 100 KE or something like, and people were spending a lot of USD, a lot of ETH on Ethereum as a gas fees, and at the same time, Aave deployed on Polygon, right? And we created a pool, incentives pool for the Aave liquidity, right? And it brought a huge liquidity to Polygon. At the same time, Sushi Swap, Curve, and multiple other DeFi came and started doing the same, and it kind of blew the whole DeFi boom on Polygon from Ethereum, and it just got crazy and crazy. Currently, we have like 500 plus applications, DeFi, NFTs, every kind of different applications. And in the latest, like few days ago, like it crash happened, right? And the MATIC was only the token who was like sustaining its value. We were seeing like huge investor interest in Polygon, right? Institution investors, retailers, and what we did is kind of creating the path for layer 2, right? If you see layer 2 ecosystem, like there was no other layer 2 solutions ready for the production as we are. And that's what happened in the last few days, and I would say weeks, that Polygon paved the path for the layer 2, and so that on Ethereum you can scale right away, right? You don't have to wait for any other applications. You can just go and deploy your application on Polygon, and you can scale right now. And that's, I think, was a major part of the success of Polygon. Yeah.
So, as I'm sure most of our listeners are aware, there are multiple ways to scale, and a lot of layer 2 scaling solutions on Ethereum are taking one specific approach. How has Polygon decided to scale?
Yeah, so we started with Plasma. So in 2007, late 2017, I was doing research on scalability and Plasma specifically. And then we started with the Plasma, but in Plasma, we didn't want to do UTXO-based Plasma. So what we did is account-based Plasma, which is similar to Ethereum, right? And for that, we took the EVM approach, right? What we thought, like, let's take the EVM and change it to make the Plasma compatible. And by doing that, what happens is that any developer can just move their applications from Ethereum chain to Plasma Polygon chain in few minutes, right? But what in Plasma currently we are supporting only transfers, not any arbitrary state changes. And if you want to support any arbitrary state changes, you need to create the predicates contract on the Ethereum chain. So we thought, it's very hard for developers to create each kind of specific predicates for each for the use cases. So what we did is created proof of stake bridge from Ethereum chain to Polygon chain. Right? And Polygon chain is before the proof of stake bridge. Uh, it has 100 validators, right? A Polygon chain has 100 validators. It runs in kind of simple parallel EVM chain, but faster to Ethereum. And with Polygon, with proof of stake bridge, you can have any kind of state state changes on the Polygon. It's just the same as the EVM chain, right? So let's say if you have a bunch of let's say Aave contracts on the Ethereum, and you just want to if you want to migrate to Polygon, you can just take those bunch of contracts, Aave contracts, and deploy on the Polygon, and that's it. You are done. Right? You don't have to change anything at all. Right? You can move your tokens, you can move your state changes, any kind of arbitrary state data. Right? You can move that from Ethereum chain to Polygon chain using the bridge, generalized bridge, and you can also move back using the checkpoint mechanism. So checkpoint is nothing but a hash of blocks of the Polygon, and we do that. We push those checkpoints on the Ethereum chain, so you can prove that your transaction is there on the Polygon in this block at this index. You can do that, and with that you can prove any kind of receipt, any kind of logs, and exit those. You can prove that state data and retrieve those data on the Ethereum chain, and that's how the withdrawal works, right? So the whole thing is kind of, we started with Plasma. We added the proof of stake bridge, a simple bridge. Now what we are trying to do is having expanding our ecosystem. And with that, we are also going to support rollups, ZK rollups, and multiple app specific chains. The approach is that we don't not going to just take the simple rollup approach. We have we want to focus on the usability and for the app developers, right? And with that, we think that pushing all the data on the Ethereum chain for the rollups is not sustainable at all. And that's why we are also creating our data availability chain in-house. And the data availability chain basically helps app developers to reduce the cost for the rollup. So when, let's say, if we want to use the rollup, Arbitrum rollup with a Polygon DL layer, you can do that. So it's kind of mix and match approach we are taking, in more kind of generalized approach where app developers can use the whole layer 2 very securely. Plus, they don't have to worry about the cost of the pushing the data on the Ethereum chain. So that's what we are going to do in the next few months. Yeah.
Wow. Yeah, just listening to that, it's very easy to understand how so much activity has shifted very quickly and why. And I was curious, how are you seeing users on Polygon differing from those who have stayed on Ethereum, if there is any difference?
User face is similar, 100% similar. It's just a kind of you have to add the URL on the MetaMask if you want to use MetaMask. But if you are using the wallet link or other kind of mobile wallet connect, right? You don't have to worry about it all. It's just works seamlessly as you are working on the Ethereum, but faster, right? And your cost is pretty cheap. Yeah.
Okay, I do think I did see that there was some data showing that some of the users on Polygon, or that a greater number of them were transacting in smaller amounts, and that whales were um, sticking around on Ethereum. But then I did also see more news saying that whales also seem to be moving over. And what types of projects do you see typically taking off on Polygon? I just noticed, it seems like there's quite a lot of gaming and NFT apps on Polygon. And obviously, DeFi is also popular. But I was surprised about the number of gaming and NFT apps.
Yeah, I mean, Uh, as I say, we have 500 plus applications right now, and most of them are like, DeFi and NFTs. In NFTs, I think my popular is one is Zedrun, right? So Zedrun is quite popular at the time, and people were using the buying the horses and they're putting the horses into races and with the race, right? Yeah,
Yeah,
and
yeah. Just for people who don't know, I mean, you said it, but it's where people can bet on these digital
yeah.
horses. Yeah.
Yeah, digital horses. And in the DeFi side, we have Aave, right? Aave is biggest DeFi right now on the Polygon, and it has 7 billion plus USD worth of tokens locked in Aave market on Polygon. With that, we have QuickSwap, SushiSwap, both have a 1 million plus liquidity, right? We have Curve and multiple others, no, other DeFi also coming, deploying as we speak on the Polygon. So I think we pretty much covered the all hot popular Ethereum applications as we speak. Yeah. So yeah.
All right. So, in a moment, we'll discuss what's next for Polygon. But first, a quick word from the sponsors who make this show possible. Did you know nearly $338 million worth of NFTs were sent last year? And in 2021, that number is growing faster than ever. If you're looking to make your first NFT, check out Near's fast, scalable, low-cost, open-source platform. Near is investing 80 million Near tokens in community-led projects over the course of 5 years to power sustainable innovation through its ecosystem, with fundraising opportunities and support for DAOs and dApps to engage fans and reach new audiences. Come learn why Near is the infrastructure for innovation at NEA.org. Tezos lets you easily exchange smart money throughout our digital world. A self-upgradable blockchain with a proven track record, Tezos seamlessly adopts tomorrow's innovations without network disruptions today. Because of this adaptability, engineers, conservationists, entrepreneurs, collectors, game developers, and artists from around the world are building, creating, and using Tezos every day. Discover how people are reimagining the world around you on Tezos. Back to my conversation with Jaynti Kanani. So one thing that a lot of DeFi protocols were discussing kind of, I don't know, maybe a year or several months ago was about the composability issue in DeFi and how going to layer 2 could break that. And some different projects have just gone with one layer 2 solution or another. And I wondered, do you feel that Polygon addresses that issue? And if so, how?
I think composability was an issue when people were talking about the app specific rollups or app specific sidechain or app, chain, right? Simple chain like Cosmos. Right? Cosmos has a like IPC. They just launched IPC, but it's still it's not that popular as we see or we predict, right? In composability, like of course, like DeFi needs composability, right? If you think about the curve protocol, simple as curve, right? It needs like multiple DeFi protocols to work. Aave needs, let's say, Chainlink Oracle, right? The other DeFi application needs other DeFi applications to work on, right? So in general, like of course, DeFi needs composability, and if you break down the applications into the multiple chains, it also brings a problem of liquidity fragmentation, right? So those two problems are go hand in hand, like composability and liquidity. But what we are trying to see on the specific to Polygon proof of stake chain, we have a one chain, right? We don't have a application specific chain. So you just deploy as you deploying on Ethereum. It's like you can say, okay, hey, this is the sister chain of Ethereum, right? Polygon is a sister chain of Ethereum. You can deploy, you can use the liquidity the same way you do on Ethereum. In the rollup and second hand, currently Arbitrum and Optimism are there, they're coming, and there will be a same as a proof of stake chains. Like we have, there will be multiple applications on the same chain. So there won't be any composability issue, but I will see some liquidity fragmentation between the Polygon chain and the Arbitrum chain and the Optimism chain. That if you deploy different kind of applications, same applications on the different platforms, and that's exactly what we are experiencing right now, right? What happens is, let's say if you have a liquidity on the Binance chain, and if people want to move the liquidity from Ethereum chain or from Binance chain to Polygon chain, it's very tricky, right? And I feel that it will be same problem when we have a multiple rollups, multiple chains in the future. Even the composability is kind of, the liquidity is part of the composability. I would assume, because it's just a same thing, part of the composability. So what we are trying to solve in the Polygon is to how to do the state call between the chain using the at the protocol level. When I say protocol level, it means that similar to IPC, right? IPC is kind of works underneath of Cosmos SDK or Tendermint level, right? You don't need a application level changes to do the transfer or composability to achieve the composability. You need to make it at a protocol level. That way you don't break the composability, you don't break the liquidity as well. You can always move your liquidity from here to there very easily without creating the synthetics on the different chains. But I think it's very tricky in general, because you have to change or maybe fork your chain, or it's very hard to change, because if you are, let's say, application level transfer, state transfer, or token transfer, is very easy. But if you go on the protocol level, on the lower level, it's hard to change, and I think it can be tricky to implement. But I think we have to do that. Otherwise, it will be a problem when we have a rollups and multiple chains. Yeah,
Yeah.
I'm hoping I make sense. I make sense. Yeah.
Well, I think we're going to have to see how this all plays out. I mean, I think it is a tricky issue, and kind of a big vision that you have there. So speaking of, Polygon has gotten a lot of investment recently, in and around it. AU21 announced a $21 million ecosystem fund. Billionaire Mark Cuban announced that he had invested, although he didn't disclose the amount. And UN0X announced you two together will spend $10.5 million to bring more users to Polygon. So what do you plan to do with this money, and what are your strategies for bringing more users to Polygon?
Yeah, I mean, we have a different agenda for different kind of funds. So for 0x and for 0x DAO fund, we are specifically looking to bring more applications for the on the exchanges side, right, and the DeFi side. And with DeFi, we are hoping to spend those money on the supporting multiple startups, multiple crypto projects, which are just starting out, and bring them on Polygon. With AU21 capital, it's general fund for the specific focused on the Polygon, right? And with that, I think they are planning to deploy those funds in multiple projects to on Polygon. Like, it can be DeFi, it can be NFTs, it can be any other projects. We also just announced Polygon SDK, right? So we are also focusing to crypto projects who are using the Polygon SDK, right, and building their own crypto projects. So we are also going to fund the projects using this fund. And on the Mark Cuban side, of course, like, it's a strategic investment from him, because he was very much a user of Polygon. He was using multiple applications, so it was great to be on board. And he's good at technology, right? So we were talking to Mark Cuban, and he was very keen, like, understanding the rollups and Z curlups and everything. So we were surprised to see his ideas around the tech. So I think having him on board is a good addition to Polygon ecosystem in general, right? Yeah, and with that, like, we have multiple other fund also coming up, focused on Polygon. And with that, what happened? We want to expand our Polygon ecosystem with rollup, CK rollup, Polygon SDK, current proof of stake chain, and we want to bring more applications who are reach to non-crypto users, right? Currently, we have a people users who are using Polygon, but what we are going to do is like we're going to launch NFTs focused fund as well in the near future. With that, we are going to target the specific to games like Web2 games, right? So those kind of different agenda we have with the funds, specific funds, and we just see like how it pans out in the future. Yeah.
And just for listeners who may not know, SDK stands for Software Developer Kit, right? So
Yeah.
that's to get more people building on Polygon. So what is the future for Polygon once Ethereum 2.0 shifts? Because obviously that will, scale Ethereum at the base layer. So at that point, what would that mean for Polygon?
Yeah, I mean, what I'm thinking is that kind of, let's say, even if Ethereum scales, it won't reach like in millions of transactions per minutes or per second, or per day, I would say. It will have obviously increase some capacity of the current chain, but I think it will also allow our layer 2 users to withdraw more space for the withdraw and deposits, right? Also, what I think is that, for example, let's say, 2 years back, Ethereum was making, let's say, thousands of transactions per day, right? Currently, it's making 1.5 million transactions per day, and Polygon is making 7 million transactions per day, right? If you see Binance chain, it was making like 12 million per transaction per day before it got problem, right? What I'm seeing is that if in the future, let's say, if crypto market expands, it will have it will need more transactions per day. It will, you need bigger and bigger, more and more scalability. So even if Ethereum 2.0 will come, I'm 100% sure it will get jammed in few days or few weeks for sure.
Oh.
uh, it's like Uber, right? Like when Uber came, you were taking the Uber, and you got the Uber in a few seconds, right? Now I know, like in Bangalore in India, like if you ask for Uber or Ola, it won't come because it's so much demand there. Because people traveled a lot more, right? Because of the pandemic, it got down, but the supply came also, demand also increased, better, higher than the supply. So it's like it's the same situation will be in the future. So I'm 100% sure we'll be like helping Ethereum 2.0 scale as well in the future. Yeah.
Yeah, that makes a lot of sense and is also kind of funny, frankly. Anyway, well, it has been such a pleasure talking with you. Thank you so much for illuminating us on this hot new layer 2 of Ethereum. And yeah, thanks so much for coming on
Thank
Unconfirmed.
you.
Don't forget, next up is the weekly news recap. Stick around for This Week in Crypto after this short break. With over 10 million users, Crypto.com is the easiest place to buy and sell over 90 cryptocurrencies. Grow your crypto with Crypto.com Earn, which pays up to 8.5% interest on your Bitcoin and 14% interest on your stablecoins. When it's time to spend your crypto, nothing beats the Crypto.com Visa card, which pays you up to 8% back instantly and gives you 100% rebates for your Netflix, Spotify, and Amazon Prime subscriptions. Download the Crypto.com app now and get $25 by using the code LAURA. The link is in the description. Thanks for tuning into this week's news recap. First headline: Taproot, the biggest upgrade to Bitcoin in 4 years, is locked in as Lightning doubles. Last Friday, Bitcoin's Taproot upgrade, the most significant protocol improvement in years, officially locked in after passing the speedy trial parameters, which required 90% of the blocks mined in a 2-week window to signal support for the upgrade. The full implementation of Taproot, however, is still a ways off, as the next step in the activation process is a 5-month waiting period. This dead period is designed to give miners and nodes the opportunity to upgrade their software to contain the logic for the Taproot soft fork. When Bitcoin reaches block number 709,632, which is estimated to happen in November, Taproot will activate, allowing nodes to begin recognizing transactions made using Taproot. The integration of Taproot will be the first major upgrade to Bitcoin's code since 2017's segregated witness. Taproot hopes to improve Bitcoin's privacy, multi-sig wallets, security, and scaling. On a related note, Bitcoin's Lightning Network has continued to grow since April, when it hit 10,000 operating nodes for the first time, nearly doubling within a year. Though May and June were slow for the markets, according to Bitcoin Visuals and 1ML, over the past 30 days, Bitcoin's Layer 2 solution has seen growth in 3 major statistics. Number 1, number of nodes grew by 5.25%. 2, number of channels increased by 9.2%. And 3, network capacity jumped by 15%. Zoom out even further, and the growth becomes even more substantial. As of June 11th, 2020, there were only 5,916 nodes with channels, and the cumulative network capacity, which is the amount of BTC locked into Lightning channels, sat at 936 Bitcoin. According to CoinSquare's Kevin Rook, part of the excitement around Lightning Network could stem from El Salvador. On Twitter, he pointed out that 2 of the most popular finance apps in El Salvador are Lightning-enabled Bitcoin wallets. He tweeted, "It's Lightning season. Lightning network capacity just broke 1,500 BTC. Networks, nodes, channels, and capacity are at all-time highs." Next headline. The crypto market may be down, but private investments continue flowing in. This week, 3 crypto companies alone announced over $350 million in funding. The largest raise totaled $230 million, with Peter Thiel leading a high-profile group of investors to back BitDAO, a decentralized autonomous organization designed to invest in DeFi projects. Bybit, an Asian cryptocurrency exchange, also got in on the project, pledging future shares that could amount to $1 billion a year. BitDAO token holders will be able to vote on which projects to invest in, and the DAO aims to employ hundreds of people in its R&D centers, according to the block. Bitwise also announced a significant raise, closing a Series B of $70 million led by Henry Kravis, the founder of private equity firm KKR, billionaire Stanley Druckenmiller, and Bridgewater CEO David McCormick, among others. According to CNBC, Bitwise recently became profitable after 4 years of business, when it hit $1.2 billion in assets under management at the end of the first quarter. Rounding out a big week in funding, DYDX, a decentralized derivatives exchange, secured $65 million in a Series C led by Paradigm, after its January raise of $10 million. With a new influx of cash, Antonio Giuliano, the founder of DYDX, and also a previous guest on Unchained, expressed interest in decentralizing the protocol, telling the block, quote, "Our goal really is to get to a point where we're only publishing open source code and all of DYDXs run natively on the blockchain." Next headline. MicroStrategy's macro strategy is pretty simple: Bitcoin. Monday was a busy day for MicroStrategy, the software company turned corporate hodler. Early that morning, MicroStrategy announced the completion of its $500 million offering of secured notes, bringing in a total of $488 million after fees to purchase more Bitcoin. According to reports, the company received more than $1.5 billion worth of notes for the first time, more than tripling the original offering of $400 million. Hours after completing the debt offering, MicroStrategy also unveiled a plan to sell $1 billion worth of its stock, with the proceeds being used for, quote, general corporate purposes, including the acquisition of more Bitcoin. The software firm currently holds 92,000 Bitcoin on its balance sheet, worth roughly $3.7 billion. With the addition of $1.5 billion in potential capital available, MicroStrategy could afford over 35,000 Bitcoin. Next headline. Crypto's first large-scale bank run. According to data from CoinGecko, Iron Titanium token, or Titan, crashed from $60 to just a sliver above $0 in less than 24 hours on Wednesday. Titan is linked to the Iron Finance project, which mints so-called stablecoins by locking in a combination of 25% Titan and 75% USDC. CoinDesk reported that, quote, when new Iron stablecoins are minted, the demand for Titan increases, driving up its price. Conversely, when the price of Titan falls dramatically, as was the case on Wednesday evening, the peg becomes unstable. In a post-mortem blog post, Iron Finance described the event as, quote, the world's first large-scale crypto bank run. As Titan began free-falling from $60, so did the pegged value of Iron, falling to under 70 cents as a bank run was initiated on Titan, creating, as Fred Shabesta, founder of Finder.com.au and an Iron Finance investor, told CoinDesk, quote, "A crypto vortex of money." Iron Finance explained this vortex as a, quote, "negative feedback loop and the worst thing that could happen to the protocol," where panic selling led to more Titan creation, which drove Titan prices down, which caused more panic. For context, at one point, Iron Finance had $2 billion in value locked into the network. That number has dropped to $238 million as of press time. Titan and Iron Finance were available on Polygon and Binance Smart Chain. Mark Cuban, billionaire investor and avid DeFi user, recently admitted to being a liquidity provider on QuickSwap, an automated market maker native to Polygon, for the DAI/Titan trading pair, in a blog post on DeFi, which I recommended in the daily newsletter earlier this week. In a response to a tweet referencing the Titan crash as, quote, "a rug pull," Cuban replied that he, quote, "got hit like everyone else." Later on, in an email to Bloomberg, he called for regulation in the industry, quote, "to define what a stablecoin is and what collateralization is acceptable." Preston Byrne, partner at Anderson Kill, tweeted back at him, "Mark Cuban, this stuff is already regulated. That coin is more likely than not an unregistered security. You should have known it and you bought it anyway. Don't call for regulation just because your crypto investment team doesn't know what they're doing. This one is on you." Speaking of regulation, next we have a U.S. regulatory roundup. On Tuesday, Congresswoman Maxine Waters announced a new working group for House Democrats focused on crypto regulation. The group's goal is to, quote, "work together on legislation and policy solutions on such matters as crypto regulation, the use of blockchain and distributed ledger technology, and the possible development of a U.S. central bank digital currency." On Wednesday, Waters' team released the group's roster, which will feature blockchain caucus and fintech task force leadership members. Bill Foster, a member of the working group and a blockchain programmer, told the block, quote, "The United States is playing catch-up to the rest of the world when it comes to digital currency. And if we're going to protect the U.S. dollar status as the world's reserve currency, we need to make the development of secure and privacy-preserving digital currency a priority." Also this week, the SEC delayed its Van Eck Bitcoin ETF decision, indicating it would like additional feedback. In the filing, the SEC is specifically looking for public comments on the susceptibility of an ETF to market manipulation, along with whether the regulatory landscape has changed significantly since 2016, when Bitcoin ETFs first gained popular traction. Next headline: Can and should a DAO go to court? Welcome to the metaverse. A recent proposal on the governance forum for Curve, a DeFi project for stablecoin trading, calls for enforcing its intellectual property rights in court. HydroSam, the author of the proposal, believes that Curve's DAO should protect its IP on behalf of its stakeholders, just as centralized exchanges would protect IP on behalf of a shareholder. He writes, quote, "Centralized exchanges protect their IP on behalf of their shareholders, and there is no reason why Curve, just by virtue of its DAO organization, should not protect itself for the benefit of vote escrowed CRV token holders." Written on Wednesday, the proposal takes aim at Saddle Finance, a competing automated market maker, which, as the proposal notes, has been accused of wholesale copying of Curve code. For example, back in January, Curve told Crypto Briefing that a QuantStamp audit found Saddle Finance's implementation of its stable swap function to be, quote, exactly the same algorithm seen in Curve's codebase. The proposal argues that Curve's governance forum should, quote, review any proposals from law firms, make them public, and put them out to a DAO vote. Any proposed settlement should also be subject to a DAO vote. At the moment, 70% of members of the governance forum agree with the proposal. Time for fun bits. A 13-year-old dev created a protocol managing $1 million. Meet Gajesh Naik, a teenager and founder of Polygon, a DeFi protocol housed on Polygon managing around $1 million in funds. According to Decrypt, Naik started coding at just 8 years old and has learned 5 coding languages already, including Solidity, Ethereum smart contract language. Arjun Kalsi, the vice president of Polygon, describes the project as, quote, a clone of Goose Finance, with a few minor modifications borrowed from SushiSwap. Kalsi praised Naik as, quote, the kind of guy who can build the next Facebook or the next WhatsApp. That being said, this is still a DeFi project built by a 13-year-old that DeFi Watch's Chris Black Warrants allows a single administrator to exert control over the entire network. All right, thanks for tuning in. To learn more about Jaynti and Polygon, be sure to check out the links in the show notes. Heads up, everyone. The Unchained newsletter has switched from a weekly news recap to a daily blog in order to keep up with the crazy pace of crypto news. Each morning, you'll get 4 to 5 quick headlines, a crypto meme or two, and a few recommended reads. Head to unchainedpodcast.com, and the sign up for the email newsletter is right on the homepage. You can also find the link in my Twitter bio. Unconfirmed is produced by me, Laura Shin, with help from Anthony Yoon, Mark Murdoch, and Daniel Ness. Thanks for listening.